Hi everyone, Gianni Di Poce here with you for TheoTRADE, and today is Tuesday, August 19th, 2025, and we are seeing markets on the retreat a bit of volatility creeping into the tape. We came into this new week and noted yesterday that with healthcare being the best performing sector in the market last week, that it warranted a bit of caution, not to mention the performance was so large and so significant that it actually raised healthcare to the best performing sector over the last 30 days in the market. And so that's pretty important to understand because healthcare is a rather defensive sector by its nature, but it's also the second largest sector in the S&P 500 behind technology. It also, is a big wide umbrella. You have medical devices, insurance, biotech, stuff like that. So we are seeing a bit of a risk off market at the moment. And I do think this is quite a flip from what we saw last week when, we were coming off of consumer discretionary leading. This is a market that is signifying that it's not an environment to force the issue on the long side. If you have some positions getting stopped out, that's okay. Cash is all right. The next buying opportunity is probably not very far away. In fact, I would venture to say that I think the market is waiting to see how the summit for this peace deal with Russia and Ukraine is going right now. Because if it goes well, I think it could tie into a low in this market. But since we are seeing the Nasdaq and technology and chips lead the sell-off lower, it is a bit of concern. You have semiconductors off over 1%. You have NVDA seeing some notable selling down almost 3%. Apple holding up all right, pretty much flat on the day. But then you have Google down about 1%. Still keeping a close watch on what's going on in China because I like the setup there. When we had the rate cuts last year in September, it led to this huge move in the Chinese market. Not to mention, you have indices like the Shanghai Composite hitting 10-year highs earlier today. So the sentiment is starting to shift a bit on China. And, as I look at the currency market, dollar slipping a little bit today, but it has been rather resilient. You can see it slipping against the yen, but actually holding up all right against the euro. So we're seeing that happen as bonds are catching a bid. 30-year bonds are seeing the strongest rally right now within the bond complex. So all in all, guys, a very classical flight to safety day. Does this mean that the market's about to drop 20%? Not necessarily. Not necessarily. If anything, if we get a 3 to 5% correction, I think it would be healthy. I think we want to buy the dip. If we see the S&P drop into the $6,000 area, that would actually be a little bit closer to 8%. We might not even drop that far, but I think that we would want to get aggressively back long again because the leadership that we have seen coming out of the April low has signaled a new bull market. So let's not miss the forest for the trees. Let's not throw out 4 months worth of a trend for 2 or 3 days of a pullback. I mean, you look at the Nasdaq here, you're 3 days off of the all-time high, so that's not bearish, right? You take a look at Bitcoin here. You are seeing Bitcoin drop into the low 110 area. That being said, I am looking for a reversal, a bottom to be carved out here in Bitcoin in the coming days. Ethereum actually bearing the brunt of the sell-off at the moment. And so I'm looking for some support here in the $4,000, $4,200 zone. And if we can form a higher low here, I think that we're going to see the epic bull market in Ethereum continue. So all in all, my message today is sit tight, don't force the issues. If you get stopped out of stocks, guess what? You're allowed to buy them back. You're allowed to buy back the leaders. You don't need to get cute. You don't need to force the issue on the short side. I'm a big believer in trading with the trend. If the market's up 80% of the time and down 20% of the time, use that 20% of the time to go outside and touch grass. It's okay. You don't need to be involved with every twist and turn in the market. If anything, you're going to trade yourself into insanity. So this is a tape right now where I think that just being patient, exercising restraint, looking for the stocks that are actually holding up the best. Those are the ones most likely to be the leaders because right now you're seeing some of the market's leaders, names like Palantir. It's a name that I've already booked profits on. Going to get stopped out of the second portion of that trade here today, but still for a profit. And even a lot of the names that I could be liquidated from in the next day or two are in profit territory. So it's just a matter of listening to the market, having that feedback loop, and not trying to convince the market that you are right and it is wrong. I'm also keeping a close watch on the energy sector here because, while crude oil has been weak and continues to be weak, you do see one of the most dismal sentiments in the crude oil market in well over a decade. So that could be a contrarian signal. Meanwhile, you've had a nice rebound in some of the solar names, but I think, one of the signals that some volatility was creeping back into the picture was that you had the big pop in pot stocks. So usually whenever that happens, it means that a nasty pause in the rally. I don't want to say like a nasty sell-off because I don't consider a 3 to 5% pullback. A nasty sell-off is on the way. VIX is popping a little bit, but not convincing of a fashion. So again, even if we see the VIX cash, rise to 18, 19, I think it's a dip buying environment, guys. Until we see technology meaningfully start to underperform, we just want to sit back, let the market shake out the weak hands in the tape, and just come up and pick up the scraps when it's ready. So that's what I had for today. Thank you so much for watching. Going to be live tomorrow discussing freeze points with Don at 2 p.m. Eastern, so you don't want to miss that. If you miss out on some of the big moves on this rally higher, we're going to be talking about how you can take advantage of that and change that for change that for yourself going into the remainder of the year. So hope to see you there. That's all for now, everyone. Take care. Talk to you soon.